Hello, everybody, and welcome to another edition of Let's Talk ETC. I have Andrei Polgar with me today. He was a great guest recently, and I invited him on again because he has an interesting new book that's coming out, The Age of Anomaly, it's called. And he has a lot of concerns and opinions, ways to cope with what's coming down the line in all our futures. So welcome, Andrei.
Thank you so much for having me. Pleasure to be on.
Yeah, so I think most people will remember you from your intro last time, but just in case, why don't you share a little bit about your background in economics and in the cryptocurrency space?
I'm a bit of a weird economist in that I started out here in Romania as an entrepreneur, doing my own thing, making a bunch of money. That led to me having savings, having everything essentially that seemed to be working well. I got accepted to university, your average life where things seem to be on track, except, of course, as frequently happens, destiny interferes with stuff. And in my case, my mom got sick, took her to get treatment in another country. That essentially obliterated my net worth. And not only that, these things happened roughly at the beginning of the Great Recession of 07, 08. So unfortunately, that took its toll on my businesses as well. So I kind of started from scratch, did my own thing, once again, started more businesses. I initially did not go to college because I couldn't afford it, but as of a certain point when I consider myself financially secure, and that's always been my relationship to economics. I've always approached it as a labor of love because I went after my bachelor's, my master's, my PhD. I did so from a position of relative financial comfort. I did so knowing that I will not depend on this part of my career to pay the bills. And essentially it's this weird set of circumstances that enables me to, I believe, be an authentic thought leader, in that on my YouTube channel, through my books, I don't tell people what they want to hear. I tell them what I think they should know. And that leads me to our discussion here today. And so many people know me as the economist dude over at 1 Minute Economics. And I feel a certain responsibility that derives from this, because I don't want to be stuck with a feeling of guilt for having certain concerns about the economy, but choosing to keep them to myself, because it's never comfortable to put yourself out there to talk about the potential of things going wrong in the economy, especially since so many people are making predictions. And that's part of the problem, actually. So many people have made predictions. So many people have screwed up making predictions that the entire idea of financial preparedness has been kind of demonetized and
discredited.
Yeah, exactly. Discredited. And this is a huge problem. And I try to do things differently in that with my book, I tell people, look, I have these very significant concerns about the economy, whether it's our over-reliance on cheap money and injections of capital into the system, whether it's the geopolitical dimension, whether it's the cyclical dimension, with the fact that only once has it happened that more time passed between recessions than right now. Should another year go by, it would be a record. So there's that as well. There is, of course, as mentioned previously, as you pointed out, that the very idea of being financially prepared has been discredited because you had all of these wannabe gurus approach the market with predictions and going about it all wrong. So these pockets of anomaly, if we are to refer to them as that, individually, each one is a significant cause for concern, whereas collectively, and that's why I kind of love the cover of The Age of Anomaly, which is a guy sitting on a boat made out of, paper currency, staring at storm clouds that are gathering. And I think it's a good parallel for our situation right now.
I have to admit, speaking of these forecasts being discredited, my wife, let me just tell you what happened recently. My wife sent me an email about this terrible thing that was going to happen with the economy, and you had to take drastic measures. And I didn't know how to cope with that because I didn't know if it was just the guy was being paranoid or what. So I just kind of ignored it just because I didn't know how to react to those type of extreme predictions. It was about the government in America seizing bank accounts and what to do about that, moving your money out of the banks. And I didn't. That was just too much. So sometimes I hear predictions like that, and I don't know if that's crazy or what.
No, you actually have every right to raise an eyebrow, because that's the main problem. See, I tell people all the time, whenever you have a guru or wannabe guru who thinks he has it all figured out and considers himself a forecaster, or whatever buzzword is being used, feel free to Google the person in question. If he's at least reasonably popular, you're going to come across past interviews, past predictions, and so on. Just grab a pen, grab a piece of paper, write down these predictions, check out the person in question and his track record. And whenever I've done it, the results have been underwhelming. And part of my way of doing things differently is people ask me, okay, what exactly is going to happen? Tell me exactly what I should prepare for. And I do need to have the humility it takes to tell people, I don't know. Your guess is as good as mine. I have these concerns. When it comes to these concerns, I can think of many potential scenarios in which things can unfold. But at the end of the day, I believe in not having the arrogance it takes to assume that you're going to figure out exactly which scenario is going to happen, and as such, you can only prepare for that one. And instead, I do my best to have my bases covered. I do my best to expose myself to have exposure to assets that complement one another. And of course, many people, especially those who listen to gurus, especially those who, are looking for quick fixes, many people don't exactly want to put in the work, but there's just no other way. And it's why I'm talking to people right now when things are relatively calm, when nobody's panicking, because at this point, if you take meaningful action, as I teach people in the Age of Anomaly, you're going to have all of the conditions in the world to land on your feet. If you wait until everyone around you starts panicking, until your friends start losing their minds and so on, in that case, things become complicated. And you can probably have, the smartest economist in the world as your co-pilot, and he won't be able to help you that much. So there's just tremendous value in us having this conversation right now.
Right. Now, before we get in, and we definitely want to talk about your concerns for the future and how to cope and how cryptocurrency ties into it. But why don't you share your background, your experience in the cryptocurrency space as well for the listeners?
I like to consider myself a hands-on economist, or in other words, someone who puts a decent balance between book smarts but also street smarts on the table. And when it comes to crypto, I don't just study cryptocurrencies, I actively trade them. I have accounts with 17 exchanges. I've done arbitrage in South Korea back when there was a 30% premium. I've done a little bit of arbitrage in Japan. The premium wasn't as amazing. And I do like to think of myself as an economist when it comes to crypto, who knows what's going on, who is actually passionate about this particular asset class. But at the same time, I'm an economist who doesn't fall in love with the things he's investing in. So I try to, despite the fact that there are things going for crypto that make me believe it's a truly amazing asset class, and we've discussed some of them in our previous video, like their ability to, give people opportunities and make the world borderless, all of that stuff. But still, we do need to treat it as just another asset class. We need to see how it fits into the bigger picture of our overall strategy. And as someone who trades crypto, as someone who is involved in real estate, as someone who trades other assets as well, I believe I'm in a good position to give people tips about how to go about building their own portfolio, to do this from a position of authenticity.
Now, wait, you something you said was intriguing to me about you did arbitrage in South Korea. Now I'm gonna reveal my ignorance. So my understanding of arbitrage, which is minuscule, is that you take advantage of differences in price. So you said you noticed in South Korea there was a 30% premium, and somehow were you able to buy cryptocurrencies outside of South Korea and bring them into South Korea, or how did that work?
As this was beginning to materialize, I kind of made it a goal to have exposure to exchanges in South Korea, which was not easy. Their websites are frequently a combination between Korean and English. They're not the most user-friendly things in the world to use. Getting accepted was a challenge. In one case, I was among the first wave of people who got accepted, and I actually got in touch with the person who was in charge of foreigner onboarding, and I gave him advice about how to treat foreigners, how to make the process smoother from them. So I did venture out of my comfort zone. And also, it was pretty difficult to do because as a foreigner, you are allowed to move your Bitcoin, for example,
Okay.
From your wallet to your exchange, and you're allowed to trade that Bitcoin for Korean won at that exchange, which will result in you having Korean won in your account.
Okay.
But you are not, and this is important, you are not allowed to withdraw those Korean won to your bank account. And instead, the only way to make this kind of arbitrage work is just to increase your crypto. Or in other words, you buy, sell, and eventually you have more Bitcoin in your account in South Korea than what you started with. And there you have it. That's what you did. So I wish I could say to people that I sold all my crypto at the highs. I unfortunately didn't, but I sold approximately a third of my crypto back then. And the overwhelming majority was represented by my positions when it comes to the arbitrage dimension. So essentially, back when, for example, prices were 20,000 elsewhere, in South Korea there were 26,000. There was a 60% premium. A 30% premium. Okay, perfect. So I sold. That was probably my best move in crypto so far. I sold there. And I ended up having a bunch of Korean won in that account. And then during the panic of February, when prices went down a lot, the premium disappeared. So essentially, you sold at 26,000 and bought back in when there was no longer a premium. Some people managed to even buy back in when there was, believe it or not, a negative premium in South Korea. Or in other words, for a brief period of time, crypto was a bit cheaper in South Korea than elsewhere because there was always this drama with regulation in South Korea, and I'm sure people are aware of that. So, but I didn't take advantage of that, but I did buy back in when the price was much lower. And not only that, I bought back in when there was no longer a premium. So I essentially managed to increase my crypto quite a bit. So it was an interesting experiment, and it was something that contributed to my mental elasticity, because it wasn't easy to pull off. It wasn't easy to, move beyond the communication barriers between myself and the people who were approving my account in South Korea. It wasn't easy to kind of figure out a strategy that works due to the fact that I wasn't allowed to withdraw fiat. But at the same time, of course, if everyone were allowed to withdraw fiat, then obviously there wouldn't have been a 30% premium to begin with. So, it is what it is, essentially. But
did you have to go to South Korea to do what you did, or?
Oh, no, definitely not. Now, I live in the European Union, and we don't really, and I don't travel outside the European Union, so I never needed a passport, because here in Europe we can just travel with our government issued ID from country to country, and it's perfect. So I did up doing certain things just to get approved at exchanges. Like, for example, they didn't accept my government issued ID, so I had to get a passport. So essentially, I got a passport just so I could get approved at exchanges. So it did involve work on my part, but it wasn't that complicated. Like, I just contacted them. I told them, look, I want to come on board. I submitted, for example, in one case, a support ticket. Then we went back and forth. And by going back and forth, I mean we went back and forth for like a month. But eventually, I got my account approved. The interface was not easy to use because, for reasons that are beyond me, they didn't manage to put together an interface that was 100% English. There was always stuff in Korean that I had to translate using Google Translate, and it was just an adventure. But these things not only enable you to make money, because I did very okay taking advantage of that arbitrage opportunity, but they do make you a better economist as well. They make you see things from all sorts of different angles. It's quite an amazing exercise for an economist, and I place tremendous value in being hands-on when you're studying economics.
Right. So, all right. So you certainly have the credentials. You've obviously been studying the economics and the cryptocurrency economics. And so why don't we now move on to the topic of your book? So why don't you share some of your concerns for the near future with us?
I'm glad you tied this into crypto, actually, because precisely because I'm a person who even trades cryptocurrencies occasionally on leverage, I'm not the easiest guy to spook by something like the perspective of a 60% stock market crash. So right off the bat, it's important for me that listeners understand that I am not afraid of a market crash. Okay. I'm afraid of what happens next, because eventually, in my opinion, sooner rather than later, I do believe a major change in narrative is going to take place. Or in other words, up until this point, if we can take 2 steps back to the dot-com bubble, that popped, people were panicking, but the narrative was this: don't worry, central banks and governments have it all under control. So they lowered interest rates. The day was quote unquote saved, but of course this inflated an even bigger bubble. And when that popped, the narrative that was pushed was identical. Yeah, we know you're panicking, but don't worry, central banks and governments have it all under control. Except, of course, this time they had to lower interest rates all the way to 0 in the US and even negative here in Europe and over in Japan. And not only that, money had to be pumped into the system directly to the tune of, and this is why I tell people that we have grown accustomed to accepting the unsustainable as status quo. In the US, for example, 85 billion per month were pumped into the system, so roughly 1 trillion per year. To give you a bit of historic context, from 1913, when the third central bank of the US, the Federal Reserve, appeared, up until the Great Recession, so in almost 100 years, the monetary base had reached something like $850 billion. So essentially more was injected into the system in 1 year than had existed after almost 100 years of central banking in the United States. Over in the European Union, if you transform if you transform it in dollars, they did even more in terms of how much they spent on QE at the height of their program. And all in all, for this reason, I do believe that eventually the narrative has to change. Because
I see. Yeah. Okay. Right. Go ahead. I'm sorry. Go ahead.
Of course, we're going to have another crash. And earlier on in this discussion, I've mentioned, the cyclical dimension, the fact that if another year passes without us having a crash, it would be a record. So we're kind of due or overdue a crash. And of course,
so if I understand you correctly, so to simplify, because I'm a simple person, so to try to smooth out the economy, the central banks and governments will inject cheap money into the system, and they did that for the dot-com crash situation. They did that for the real estate meltdown in 2008. Yep. But you're saying that you can't keep doing that forever because they took advantage of that too much in the last crash. Is that right?
Yes, I do believe that unorthodox monetary policy is not a bottomless pit. And of course, people are complacent. You can have interest rates at 0 and the average person is still going to keep money in the bank because he just doesn't want to venture outside his comfort zone. However, eventually that's going to end. And for example, okay, again, we're going to have another crash because that's just how the business cycle works. People are once again going to panic. And obviously, if you're the head of a central bank or a government, the last thing you want is for things to collapse on your watch. So there's every incentive in the world over there to kind of kick the can down the road of another business cycle if it's possible. Right. So they're going to say, once again, the same narrative, don't panic, we have it all under control. Of course, the economy is going to demand a bigger dose of stimulus. And they might say, hey, don't worry about it. We're going to lower interest rates to negative 0.5% in the United States. And instead of 1 trillion per year, we're going to pump 3 into the system.
Right.
If the market accepts it, of course, we're good to go for another business cycle. But on my channel, I even have a video about how the banking system works, fractional reserve banking. And the thing is, eventually, people are going to take action. Like, for example, if interest rates are at 0, yeah, people are going to be complacent. If they're at negative 0.5%, then maybe 5% of depositors are going to say, I refuse to pay you to keep my money, so I'm going to get it out of the banking system.
Right.
If you lower interest rates to negative 1%, then maybe 15% of depositors are going to say, wait a second, I am not giving you 1% each year just so you can keep my money. And things start becoming problematic because personally, I cannot think of one popular bank that would withstand it if even 3 out of 10 people were to demand their money back. And that's why I keep pushing the idea that unorthodox monetary policy does have its limits. And eventually those limits will be reached. And the market is going to say, no, we no longer have confidence. And that is the key word here, confidence. Right. We no longer have confidence in your ability to get us out of this mess.
Now let me try to be devil's advocate, because I think a lot of people in the cryptocurrency space, because the cryptocurrencies, Bitcoin, the genesis of Bitcoin was during this crisis. They are averse to increasing the money supply. That's why Satoshi made Bitcoin to have a fixed supply, and that has a lot of people like that in the cryptocurrency space. However, and a lot of libertarians would say that, yes, by pumping all of that money, that was going to cause hyperinflation and all of these problems. But to be devil's advocate, the reality is that hasn't happened yet. We haven't had hyperinflation and all these bad things that you would expect to happen from all these trillions of dollars being thrown into the economy. So
not necessarily expect to happen, because if we dig a bit deeper, it is indeed true that the monetary base has gone from 850 billion to today's value, which is 3.8 trillion.
Yeah.
However,
so we have all this cheap money. So money's worthless. So then how come the prices aren't?
No. That's kind of the thing, because we have to see what happened next, because there's more to the system than just the monetary base. If we look at the M1 base, it has not gone up as dramatically as from 850 billion to 3.8 trillion. It only went up, quote unquote, only 2.5 times. If we look one step further to the M2 money supply, that one only went up roughly, I think, 1.8 times. And this is the important distinction to be made. And this is why people shouldn't be surprised that we didn't have
Can you define M1 and M2 for the
it's not complicated. You have the monetary base as your basic money, and M1, M2 is just adding different types of things that are considered money to the equation. So obviously M1 is going to be broader than the monetary base, and M2 is going to be broader than M1. Like, simple. And the thing is, central banks can control, of course, the idea of pumping money into the system and increasing the monetary base. But if that money ends up being simply used by banks as reserves with the central bank, by commercial banks as reserves with the central bank, then essentially that money doesn't go into the system and doesn't end up in the pockets of the average person. And by not ending up in the pockets of the average person, it's impossible to have hyperinflation. And even more so, speaking of hyperinflation, because it's a very common theme among people who, talk about preparing for disasters and so on. I do want to make it clear that there is no historic precedent for a country like the United States to go from being the number one economic superpower to experiencing hyperinflation. I don't think it's possible. I don't think it's impossible, but it's not likely. And people are quick to point out Germany, but let's not forget that Germany, back when it dealt with hyperinflation, was not in the position of the United States today. Germany had already been weakened by losing a war, by debilitating conditions of the Treaty of Versailles, by having its Ruhr Valley occupied and supporting the worker strike over there. So by the time hyperinflation hit, Germany was already a weak country. And that's why people shouldn't be quick to expect hyperinflation, in my opinion, because for that to happen, and for a country like the United States or Japan even to become a prime candidate for hyperinflation, a lot of other things need to happen first so that the country in question becomes weak enough for hyperinflation to represent a threat.
Okay, so you're saying the banks are holding on to all that money, and that's one reason we don't have hyperinflation, and the government and the central bank is limited in what they can do with the next crash. And so that's why you said you were thinking there's going to be unorthodox solutions, but you didn't go into specifics, and maybe it's not possible. But so what do you think the governments and central banks are going to do when we have the next crash if they can't do quantitative easing as easily?
Well, I do believe they're going to do more of the same, because it has been reinforced in their minds that, hey, whenever we have a crash, we just embark on this unorthodox monetary policy, and look, we don't have major inflation problems and everything's just perfect. But while central banks, and this is one important thing about what I've mentioned earlier, while central banks can control what they do, which is increase the monetary base, they cannot control what happens next. And it just so happened that last time, most of the money ended up used by reserves, as reserves by commercial banks. But they have no control, and they have no way of being sure that this time things are not going to spiral out of control. So in the end, I don't believe it's going to be the people behind central banks who say, we no longer want to do it. No, it's going to be people behind central banks who say, we're going to try more of the same, but eventually the market reacts in a way they didn't expect. And that, in my view, is going to lead to a major change of narrative, where essentially central banks and governments are going to go from these institutions which are always there to bail us out That's going to change from the average person asking, wait a second, who exactly is going to bail out central banks and governments? And
Right.
in my opinion, of course, I cannot be certain, but in my opinion, a major loss of confidence when it comes to the elephant in the room. And the elephant in the room is not the stock market, it's not the real estate market. The elephant in the room is represented by sovereigns, by people's confidence in banks and central banks, in central banks and governments. Once that disappears, I believe we will be in for a bit of an economic reset type situation. And
Right.
historically speaking, that tends to lead to a major transfer of wealth. And part of what led me to spending so much time and energy writing The Age of Anomaly, promoting The Age of Anomaly, is precisely this knowledge that the average person tends to be on the losing end of this deal.
Right. Oh, I just thought of something. Remember how I started the conversation, or one of the things I said at the beginning was that my wife had given me this email about this concern that. So now with your explanation, that makes sense. That they were talking about the banks seizing bank accounts, and what you said is that what could cause trouble is if people panic and start withdrawing their money from bank accounts. So one obvious prediction, or one obvious possibility, is that governments and central banks make it difficult, right, for people to withdraw their money. I think that's what they're.
Of course. And naturally, if you were in their position, if I were in their position, we would be doing the same. We would be looking for solutions to make the system more robust, which is why, for example, all over the world, governments and central banks are all in favor of moving as much as possible to digital money rather than physical cash and things of that nature. But again, despite the fact that plans are in place, whether we're talking about governments, central banks, institutions like the IMF, who say, hey, don't worry if people lose confidence in the dollar, we're just going to have a monetary system based on our SDR. Plans are in place when it comes to these various institutions. But to believe that in a climate that revolves around a massive loss of confidence and precisely the status quo, that you as a government, as a central bank, as an institution like the IMF, who tends to be associated with the status quo, to believe people are going to be quick to accept your solution, I think that's quite arrogant.
Right. Okay. So we've talked about the monetary concerns. So now, why don't you kind of describe what's then your suggestions for how to cope if and when these calamities happen? Why don't we talk about that now?
Of course. And again, unlike many of my peers, I'm of the impression, I try to explain to everyone that the timing, thinking about the timing so much, is not as important as you think. What's important is execution. And you saying, look, as of this point, after listening to this show, I'm going to do something meaningful to prepare. And it's just amazing how if you do these things when nobody is panicking, it's not that difficult to kind of have a proper plan and execute it. Like what I choose to do with the Age of Anomaly is take things in a logical manner, one step at a time. I tell people, let us start by knowing our economic history, not because I believe history repeats itself, but it does tend to rhyme, and it's impossible not to draw parallels. It's impossible not to find common denominators. So by having a firm grasp on economic history, you essentially have an amazing historic reference point.
Right.
If you couple that with a willingness to at least spend a few minutes each day keeping up on current events, you're going to, unlike the average consumer, you're no longer going to watch the news like you would be watching a soap opera. Instead, you will be receiving signals. You're going to say, wait, something similar to what I've just seen on the news happened 100 years ago, and it led to this. Something similar happened 200 years ago, and it led to that. So this awesome combination between being willing to keep on top of current events and having this proper reference point, coupled with something else I do in the first part of my book, which is help people, tackle mindset-related issues like coping with financial losses, like knowing how not to lose your cool when investing and things like that. These things combined are going to dramatically increase the likelihood that you will be able to spot the next financial crisis as early on as possible and position yourself accordingly. Right. However, the second part of my book revolves around the exact opposite. It revolves around me telling people that I may very well be taken by surprise as well by whichever manifestations we'll be dealing with. So it makes sense, I believe, to dedicate just as much time and energy to becoming more financially resilient in general, so as to better withstand anything the economy, life, and so on throws at you. And fortunately, once again, especially if you're willing to take meaningful action right now when nobody's panicking, that's not hard to do. So I take people from asset class to asset class. I try to, deconstruct some common misconceptions and tell people, wait a second, precious metals and crypto aren't supposed to be arch enemies. They can actually complement one another. And it's my goal through the second part of my book to get people not hooked on my predictions, not dependent on one strategy or another that I spoon feed them, but on the contrary, to get them to become logic-driven economic thinkers, to know exactly what they invest in, why they invest in it, and how they're going to execute the plan. So I take them through all assets. I say, look, here's everything I know about stocks. Here are the pros, here are the cons, and here's how to determine whether or not they're a good choice at this point in time for someone in your situation. I do the same when it comes to everything from...
Yeah. Now, can I take a guess? After what we've been talking about fiat currency, is part of one of your main themes to move your wealth out of fiat currency, for example, into real estate and stocks, but anything but fiat currency, anything but cash? I'd guess, is that one of your themes?
I like these two apparently different attitudes of Warren Buffett, but combined they make sense. Like Warren Buffett says that cash is the worst investment you could possibly make because you know you're going to lose purchasing power. You know you're eventually going to be on the losing end. Right. But at the same time, he says that money is like oxygen. You don't notice it most of the time, but when you need it and don't have it, it's going to be the only thing you notice. So my approach when it comes to cash and cash equivalents is simple. Yes, I tell people not to have a huge position in cash and cash equivalents. I tell them to make their money work for them and kind of teach them how to invest in a smart and rational manner. But at the same time, I'm pretty big on the idea of at least having a bit of a cushion when it comes to fiat as well. Like there's this Bankrate study from 2015, I think, about the average person in the average family in the United States and how these people are not even equipped to withstand something like a $500 emergency bill, a medical emergency, an auto repair bill, and so on. And it does give me goosebumps to think that, people in the strongest country of the world, the United States, during times of relative prosperity like these, they still barely get by. The average person still essentially lives paycheck to paycheck and is thereby extremely vulnerable and dependent on the well-functioning of a system that hangs on in certain situations by a thinner thread than people realize. So I do believe it's important not to be in that extreme. Like, make it so that a $500 or $1,000 emergency expense does not make you, liquidate assets at fire sale prices or do something dramatic or, contact people to borrow money from them or get payday loans or whatever. I do believe it's important to have this safety cushion of fiat.
You're saying, yes, have some cash is what you're saying, but not,
for sure.
Okay, and can we keep that in a bank, or is it wiser to keep it in other places with your predictions?
I actually do tackle this in the book as well in my section about cash and cash equivalents. And essentially, it depends on where you live. In some cases, if you take into account the guarantee mechanism and, the overall landscape, as far as that particular stash is concerned, you can just keep it in the bank and it's going to be fine. Of course, you also have the option of storing it at home. But as I explained in the book, there are risks involved, not just having it stolen, but for example, having it burn down if you have a fire in your home, or having it be affected by a flood. So essentially, if you choose to store cash at home, you're going to have to deal with that stuff. You're going to have to at least get a decent, fire and water resistant safe. You're going to have to spend money so as to properly be able to store your fiat if you choose to do so outside of the banking system. But okay, while having at least something at home, enough to cope with just immediate emergencies, that's fair enough. And even if you lose that, it's not going to be a tragedy. Mm-hmm. When it comes to the majority of your holdings in fiat that you keep for emergencies, I think that if you live in a developed country with a decent banking system, you can probably keep most of it in banks and be relatively safe, especially since, when it comes to you only have a small position relative to your net worth in cash and cash equivalents.
Okay. Now, let me ask you a question related to cryptocurrency, which I think will interest a lot of people. So if people moved a lot of their wealth to cryptocurrency, do you think that the craziness of fiat currency that may happen in the future necessarily is going to affect cryptocurrency? You see what I'm saying? That just because, let's say, the value of the dollar crashes, does that mean that the price of cryptocurrency like Bitcoin and Ethereum Classic has to crash?
In the long run, no, but in the short term, possibly. Let's please remember what happened to precious metals after the onset of the 07-08 financial crisis. Precious metals, for that type of uncertainty, represented a decent hedge, and a lot of people who owned precious metals would have expected the market to reward them right away, except that didn't happen. The initial reaction of the market when it comes to precious metals after the onset of the crisis was negative. They initially went down in value. A lot of people were shaken out. And only then, as the market properly digested what happened, only then did precious metal prices climb back up into their highs of 2011. And I try to tell people who are involved in crypto, yes, I do believe that if you invest in the best of the best in terms of cryptocurrencies, you're making an excellent decision of hedging against uncertainty. Mm-hmm. But you need to also understand, and this is coming from someone who actively trades as well, that markets tend to move in the direction of maximum pain for all parties involved. So the market is going to want to shake you out. The market might want to test your resilience and say, wait a second, I'm not going to reward you right away. Or on the contrary, you're going to see that the crypto you invested in precisely to hedge against this kind of uncertainty, you might see it go down in value initially. And this is where a lot of people are going to panic sell and make mistakes. I do believe that if you're in crypto, you have to kind of have the resilience and the mental preparedness it takes to understand that the market might not reward you right away, and that sometimes it does take a bit of time until it digests what happens and rewards those who hedged accordingly.
Right. So I think one of the things you're saying is that long-term cryptocurrencies are going to be a good investment, but in the short term, you just have to you have to expect that you can have craziness and it'll do the opposite of what you might expect. So don't ever expect to predict the short term.
Yeah, people do need to remember one of the oldest adages in the world of trading. The market can remain irrational longer than you can remain solvent. Like if you remember a few years ago, you had people like Kyle Bass who were all over television telling people, look, Japan is embarking on crazy monetary policy. And they were. So he said, it's time to short the Japanese yen. It's time to short Japanese government bonds. And he made so much sense. All of his arguments were perfectly articulated. He was just so coherent in everything he said. And do you know what they call that trade now? They call it the Widowmaker because because so many people lost so much money on that trade, on a trade that looked amazingly obvious on paper, but as people have been able to find out, the market can remain irrational for longer than you can remain solvent. So when it comes to all assets, not just crypto, you do have to come to terms with these things.
So how do you deal with the fact that you obviously are very knowledgeable about investments and you take educated risks. So how do you deal with the fact that no matter how smart you are, the market will surprise you? You just diversify and put a little bit in different risk pools?
Of course. There's just no better alternative to just putting in the work and having exposure to various asset classes that, very important, complement one another nicely. Not, like many people do when it comes to precious metals. They say they're diversified, but what they mean by that is that they invest in gold and silver. No, it means having access to assets that complement one another. So whatever happens, however the market chooses to surprise me, at least I know, hey, I have income producing rental properties. Maybe my rental income is going to go down. Is it going to go down? Is it going to go to zero? Probably not. The same way I have exposure to crypto. I have exposure to other asset classes. Once again, I'm more than willing to accept the fact that even for an extended period of time, my positions can take a major hit because it has taken me many years to reach this point. But I can say that at this stage in the game, and that's why I have, the mental clarity it takes to focus on helping others, on writing this book, on spreading the message about, these things to other people, because my house is in order. And what my main advice to people is that it's always smarter to prepare many years even in advance.
Mm-hmm.
Because it's better to be several years early than a week too late. And it takes time. It takes time to establish a position. It takes time to eventually have exposure to all of the assets that you consider desirable for someone in your situation. And there is no time like the present to essentially come up with a strategy and execute it, which is my main goal. I've been on so many shows on YouTube, on podcasts as well. And my main goal is essentially this, telling people, hey, if you buy The Age of Anomaly, perfect. Or if you subscribe to my YouTube channel, I'm happy to have you. But even if your solution in no way includes me, I'm happy if people at least take some form of meaningful action after listening to our conversation. What that meaningful action is, of course, that's entirely up to them.
So don't be complacent. That's one of your main messages. Don't.
Yes, this is coming from someone who actively trades, from someone who has owned 3 hosting businesses, development businesses, an auction platform. I've been all over the place, professionally speaking. And if there's one thing I've learned after doing so much stuff, it's that more than half the battle is just showing up. More than half the battle is at least being willing to think about these things, at least being willing to do something. So if I can get people to do even that, it's going to be a major victory.
Right. All right. So I think you've given us a good overview of the topics in your book and your thoughts for the near future. Is there anything else that we've missed? I think you've got it. Anything else you want to say that before we close?
No. The only thing would be that if people found the book interesting, I'd recommend buying it until the 12th of August, so until Sunday, because I do try to tell people that when it comes to books, YouTube, I don't particularly care about the money. So I do this when it comes to this book by essentially reducing the price to just 99 cents until Sunday, which is practically giving it away, but also making sure people are even symbolically invested in my work and have some skin in the game. And since I'm on a crypto show, I do want to tell people that also this week, they might want to check out my 1 Minute Economics YouTube channel, because to kind of celebrate the launch of my book and tell people that it's not a funeral roll, I've organized a pretty cool contest with prizes that people in the crypto space are going to find interesting. Like 1 Bitcoin is the number 1 prize, which is huge for contests like this. I have hardware wallets. I have, $100 Amazon gift cards, $100 per person for 10 people, either in PayPal or crypto. So I have all of these prizes essentially in an effort to think outside the box and reach as many people with this book launch as possible. Because what I try to do differently when it comes to other people in education is I focus on what works. I don't criticize my audience. I don't say, oh, people spend too much time binge watching stuff on Netflix and not that much time learning. Yeah. I prefer to focus on, being out there and on so many shows, reducing the price of the book, organizing a contest, doing whatever I can to compete for people's attention properly, and in the end, win them over. There's no other way to do that effectively, in my view.
Right. All right. Well, thank you, Andrei. So once again, the YouTube channel, 1 Minute Economics, and the book, The Age of Anomaly. And thank you. And I'll put the links in the metadata and in the description. So thank you for chatting with us today.
Thank you so much for having me. Have an awesome day, guys.